Ladies and gentlemen, good day and welcome to Srivari Spices and Foods Limited Investor Meet conference call. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. Please note that this conference is being recorded. I now hand the conference over to Mr. Narayan Das Rati. Thank you, and over to you, sir.
Good afternoon and welcome to all the investors of Srivari for this meeting. Hope all are healthy as well as wealthy by investing into the Srivari. And a small presentation is there, so that will be presented by Shrikant Banala, our General Manager of the company. Over to you, Shrikant ji.
Hi everyone, good afternoon. I'll just take you through Srivari Spices. Investors in the investors meet. I just wanted to take you all through the roadmap which we have planned for 24-25. So initially, I would like to show you what are all the activities that we are actually planning to gear up for our next financial year. So the first thing is all we would want to say is we are introducing all new vertical. It's a new vertical which we are coming up with is the ready stock. The ready stock is something that we are introducing 50 ready stocks, three-wheelers. These are the three-wheelers. In the first phase, we are coming with 50 ready stocks vehicles, and in the next quarter we'll be planning for another 50 more. So the entire plan is we will be looking somewhere around 200 vehicles by the end of October, November, December as a quarter. So we 24 I'm talking about. So we'll be running this particular activity of ready stock through the super distributors in the general trade. So this will really help us in covering so many criteria in terms of generating revenues as well as the profitability. So let me go through this ready stock activity. What does this ready stock activity actually helps us in? So what are the key outcomes and objectives? The first one is we are definitely gearing up with from currently we are having a database of a dealer database of about 15,000. From this 15,000, we are moving towards 50,000 by introducing this 50 ready stock three-wheeler vehicles. This will really help us in covering C-class retailers, covering every corner of the city and towns in Andhra and Telangana. And the second thing we are doing is it is going to be very profitable for us as a vertical. This is a very profitable vertical for us. The reason is these C-class counters usually are at a very lower slabs of schemes, which helps the higher profitability to the organization, because the prime objective of this particular service is that the retailers into this category of C category are only concerned about the services they get into the corners of every cities and towns. So hence this particular vertical is going to be very profitable to the organization. And the third thing is it also going to help us in building the brand Srivari. Like let us imagine the 200 ready stock autos, these vehicles running up and down in the cities of both Andhra and Telangana and towns gives us a great visibility on the brand part. This will really give a very good impact in terms of creating the brand of Srivari. The next one is this will ensure us in covering 75 lakh consumers only under this vertical. So 200 vehicles covering so many retailers of about 50,000 retailers will help us in covering 75 lakhs consumers. And the last but not the least, these 200 vehicles would be running on EV model, which will help us again in the low cost maintenance, and this will also help us in not creating any pollution to the society. So this is one of the reasons why we are running on the EV models. You can see the pictures of the ready stock vehicles launched. This is the first phase where we have launched these vehicles, and most of these vehicles would be running with the sales team as well as drivers and with the super stockists. So that was one of the major things that we have introduced, and it has been running very successfully, and we are waiting for the next set of 50 autos that would be coming up in the next quarter. So we'll keep you posted on the developments on those. Moving to the next one, organization is also looking forward towards a mega dealer meet. This is more of like, we are inviting 1,000 plus wholesalers across the Telangana and Andhra Pradesh. What are the objectives and the outcomes of this particular mega dealer meet? This mega dealer meet is actually conducted on 7th January. In the coming next 2 weeks, like we have in January 7th, we have actually we are actually conducting at one of the major function hall, which is Classic Gardens at Secunderabad. That becomes the centralized part of the city where, like we are expecting about 1,000 plus wholesalers coming across Andhra and Telangana and Andhra. So what are the outcomes? We will be able to cover A plus category retailers, builds which helps us in building the confidence in the dealer community. So earlier, as I said, like with the ready stock concept, we would be covering the C category consumers, retailers, and here in this activity, we would be covering more of like A plus category retailers. This will help in getting the results in both the categories of C category as well as in the A plus categories. And this will also help us in penetrating the rural coverage. Like most of these wholesalers buy in volumes and then redistribute it to the remote areas where our sales teams is not able to reach. So this will help us in making the penetration into the rural coverage. Other one is the capturing of market share. Wholesalers are usually the volume makers. They help us in generating the volumes, which will also give us a great market share capturing from the competition. So this is one of the major factors which will help us in getting the market share. The last one is economies of large scale. The more the volumes, the better the cost. So this will help us in making the economies of large scale. Moving forward, I would also like to give you some light on the modern trade development. Introducing Srivari products at Reliance JioMart, we have been successful in entering into the Reliance JioMarts. First of all, initially they have more than 200 to 250 outlets, out of which the top 50 outlets will be first taking the placement of Srivari product as a first phase. And moving forward, looking at the progress in the first 50 outlets, we will be moving towards the second phase of it. Second thing is successfully we have captured consumer base at 13 premium large format outlets at Balaji Grand Bazaar. And moving forward, upcoming modern trade platforms are over and above Reliance JioMart and Balaji Grand Bazaar. We are also looking forward to introduce our products into Lulu, Metro Cash and Carry, and the national marts. So already we have our products at Balaji Grand Bazaar, which are the few pictures shown below. Moving forward, the other developments are we have also enhanced storage capacities at the manufacturing unit by about 4,000 square feet. You can see the picture, and we have also covered 300 retailers, the major spots where there could be proper visibility and all, we have covered those in the in-shop branding and the signboards. You can see the picture of that. Thank you. These are all the activities we have taken it forward for this current quarter, and going forward, we would be keeping you posted on the developments of the second phases. Thank you. Yeah, we are also open for any questions.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the raise hand icon available on your toolbar or on the QA tab available on your screen. You may also post your text questions on Ask a Question tab available on your screen. Kindly turn on your mic when the operator announces your name. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Vipul Lamba from EVK Financials. Please go ahead. Line for the participant dropped. We move on to the next question. The next question is from the line of Vikas Joseph, individual investor. Please go ahead.
Are you able to hear me?
Yes, we can.
Hi, sir. Hope you're doing well. Thanks for conducting this con call. I wanted to understand you had a plan to introduce more products, right? Apart from the spices and atta. Where are we on that journey? And also, what is the vision for the company in the next 3 years? Where do we want to reach in terms of revenue in the next, say, 2, 3 years? If you can highlight on those 2 points.
Yeah, thank you, Mr. Vikas. I think it's Mr. Vikas is on. I'm replying to the Mr. Vikas Joseph, right?
Yes, 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 yeah.
Yeah. Yeah, we are coming out with a new portfolio, adding into our this categories are oil will be the new category which are going to add in our catalog. That will be in the first quarter of the planning to add in the first quarter of the next 5 year, 24-25, and it will be basically the concept of the oil is people will think this is about the low margin and high volume. No, it's not like that. We are coming out with the healthy and unrefined oil. All will the filtered oil which, which to maintain the nutritions as well as quality of the oil. So we are our focus is mostly on the quality of the products. So with pasting the
Sir,
other
sorry
brands
to interrupt
now,
you.
now we
We
are
are
also
losing
with
your audio.
that
Yeah,
company to
Naren,
us.
sorry to interrupt you, but we are losing your audio.
Okay,
Yeah, can you hear now?
is it
Yes.
audible now?
Yes,
Yeah.
sir.
So we are coming out with the filtered, double filtered oils. First we'll introduce the groundnut oil as well as safflower oil. Safflower is which is rarest oil. No company is serving in India throughout the India at presently the complete pure oil of safflower oil. Only the company is Marico is introduced as a Saffola that is also blend. That is not the pure safflower oil. We are coming out with the pure safflower oil as well as groundnut oil, and we will maintain all the parameters according to the export quality product. So definitely we will plan next year for the export also. In that mindset, we are coming out with the new unit for then in April, May, June. June we will definitely launch this product, which will be even export planning for the export as well as. So down the line, the next 3 years, where we are looking is we want to be the best in the industry, not in the partner in the parameters of only with the numbers, but as a quality product. We will be the first company with the complete healthy and quality portfolio. This is our objective mainly. Maybe the numbers we can't express on this, but we'll definitely make a good numbers, and investor will be rewarded and happy with the investment with our company. Over to you, next caller in if any.
sir, if I may ask, do you have any plans to introduce other spices like apart from the ones
Yeah,
that you
actually,
have?
in an earlier meet, we said that we are coming out with the new 15 masalas which are into the pipeline, which are delayed because of the our penetration into the atta was very high. The kind of response we are getting into the chakki fresh atta, so that is very unexpected. We got the response. So that project we have delayed for the next. We are going to coming out with the January, which was supposed to launch in the November end. So now that we are launching into the January actually.
January 24.
Yeah, yeah, this
Okay.
January 24.
And what is the where are we in with regards to market reach? Are we still only in Telangana and Andhra, or are we
Yes,
tapping into some markets also?
yes. We are into the only and the Andhra and Telangana, and next financially we will be focused on the Andhra and Telangana only because the potential of the product and the
Greatly.
category is very high. So apart from going to the geographical expansion, it is better to focus on our current market, which will be help easily to penetrate the market as well as maintain the profitability. If we go for the if we make it in the other
Expansion.
states, it's expansion in other state, too fast, it will affect our profit margin also. So we want to first capture the market here, and we want to be the in the top three numbers. Then we'll penetrate into the new locations. We'll open the new locations.
Okay, just one more question, sir. What is the
Yeah.
target market for atta and spices you're eyeing, and what are the targets for the same in FY25? Is there any capex or any margin picture you can let us know on that?
Sure, as well as capex will be definitely we have to invest into the further investments as the ATA potential is packed in the packed segment in Telangana, and there is more than 200 crores per month. So you can understand what is the kind of potential and market is open for us to reach out. So definitely it will need a capex in the next financial year to for the further expansions.
Okay. Okay, and we'll maintain the margins or increase further as we introduce new products, right?
Definitely, it will increase our market share and as well as the margins also. Because already we are into working with the kind of market, same market we are going to launch the product. So it will not affect the margin. It will affect. It will increasing the margin will increase. Definitely increase. We are expecting 1 or 2% increase into the margin also.
Okay. Okay, I'll come back in the queue in case I have further questions, sir.
Yes,
Thank you.
please.
Thank you. Participants wishing to ask a question may click on the raise hand icon available on your toolbar. In the meantime, we have a text question from Nitin James. What is our current revenue run rate per month? What are our current margins at net level?
Yeah, could you please repeat the question?
What is our current revenue run rate per month? What are our current margins at net level?
Yeah, just a minute. Okay. Yeah.
Yeah, what was the question actually exactly?
Yeah, the question was, what is the monthly run rate?
टेक्स्ट में रहेगा देखिए टेक्स्ट में देखिए बच्चे के हाँ यहाँ पे दे सकते हैं
What is your current revenue run rate per month? What are our current
so
margins?
our current revenue is around 8 crores per month we are onto the in running the
Yeah, go on.
last month it was 8 crores we clocked the revenue and margin as well as we are maintaining 26 to 27% of the gross margin overall.
Thank
What's the
you.
overall plan on D2C model? The website is. What's the D2C business model? Status बताओ उसके ऊपर.
Yeah, presently we are working on the D2C model with the not on the currently website with the customer app
Sir, sorry to interrupt you. We are losing your
which can
audio.
be oh so can I text कर सकते हैं उसको reply कर सकते हैं कुछ में
Yeah, can you hear now?
Yes, yes, sir.
is it audible now the next
Yes,
question was all about the D2C model actually is it audible now
yes, sir.
is it
Please go
audible
ahead.
Yeah. So the next question was Mr. Anuj Mehta about the D2C model. We are currently working with the D2C model on our own app as well as on the customer care number. So we are presently focused with our existing customers as well as we are coming out with this. Recently, we have launched the app on the iOS and Android. Both the app is Srivari as the app is available. So we are working on that model as of now.
Thank you. Next audio question is from the line of Vipul Lamba from EVK Financials. Please go ahead.
Yeah, hi. Good evening, sir. This is Vipul Lamba here. Can you hear me?
Yes, sir. I can hear you, Mr. Vipulji.
Okay. So, sir, one question first on the new initiative which we are taking for the new vehicles we are adding. By next one
Okay.
year, what is the kind of investment we plan to do there?
So definitely we are taking from the this NBFCs with the and our banker is HDFC. So they are funding on that the vehicles. So our investment will be per vehicle is around 50,000 per vehicle.
Okay. And in next one year, as you're saying, right now I think we have 50,000 distributors. This will lead to addition. I mean, three times the distributors or retailers being added because of this initiative, right?
Yes.
Okay. And what is the current utilization of our plant in terms of spices as well as atta?
So now both are almost around 60 to 70% in between. We are running out with the this consumption as of now.
Because I remember last time the spices were 70 and atta was 50
Yes,
during
yes,
the
yes.
IPO.
Spices is on the same page. As well, we have more in the last quarter. We have focused on the more last 2 quarters. We are focused on the more atta as well as penetrating that to the next level. As in the atta, we have very less competition. In the spices market, we have huge competition with all the other brands. Maybe we are very in spices also in very good placements on all the locations, but we are focusing on the more atta is because we can penetrate and capture the market share easily with that.
Okay, so
So
atta
currently
is like you're saying 70%. You're saying the utilization.
now, yes.
Okay. And sir, regards to working capital, I was saying it is like negative working capital, and rightly so. In growth, when the company is in the growth phase, it happens. But what is the kind of working capital, net working capital on a monthly basis? Kind of investment we need to do into working capital, or we are able to generate net cash.
No. That the kind of the question that our business is a kind entirely different with the other businesses. We cannot compare the working capital with any other projections. As the problem is that in this industry is based out of seasonal industry. So sometimes it will be very high working capital required. As mostly in the after June, it's required high working capital because we need to invest into the stocks for further next 3 to 4 months. We have to procure the material, raw material, because after that, after season is completed after June, you won't get the proper raw material. So we need to invest more onto the at that time of and again to the we are going to the expansion. So definitely it's increasing our market capital, and as of now we are somewhat that credit debit is line is somewhat huge. We can see, so we can open the new areas and new markets.
Okay, so you're saying that in the June month the working capital may be negative, but now it has started going positive. Now more
Yeah.
investment required in working capital in subsequent months for stocking.
No,
Once
no,
you have
no.
to do it, and after
It
that
is
it's fine.
required in the, it is definitely it is required in the 24-25. As of now, we
Sorry.
didn't require any working capital. In
Okay.
24-25, we are coming out with the new project with the oil also, as well as some new
Right.
more projects are there in the line. So definitely we will need into the not the current financial year, maybe in the March or next year, maybe we require. That
Okay.
will be
So
subject
for
to.
all okay, so for all these initiatives, I mean, what is the kind of debt equity we plan to maintain in terms of how much would be our investment and how much would be the debt we would have to take?
So definitely we will prefer to 1:1 go for the debt equity ratio.
Okay, and what would be the current ratio?
It's almost 1:1. That is somewhat
Okay,
high
you
actually. Ratio. Yeah.
okay. Okay, you're saying you will be able to continue, sir, with the new investments and initiative also the same debt equity ratio?
Yeah, we will maintain it. Debt equity ratio.
Okay, okay. And sir, what would be our current market share in Telangana and AP? If you have any some percentage in terms of atta?
No. At the kind of see, we cannot share the what is the kind of percentage of the market share, and you can see the 200 crores of market after that where we are. We are not in the 2 to 3% as of now. So is it too early to talk about the market share and percentage?
Okay.
It's a
And
huge
sir,
consumption market of trade. So that is the point we are unable. We will not focus on the other geographical area, expansion in the geographical areas in other states. So we have huge potential in the Andhra Telangana itself. So you can see after 400-500 crores of revenue clock, we will think about the next states for the geographical expansions.
so you're saying 4-5 crore per month when it start coming, then you will start thinking about other states. That's what you're saying,
No, no,
right?
no, no. Around after 25 crores per month.
Around 25 per month. Okay, okay. And
20 to
so
25 crores per
any
month. After that, we'll go for the expansion.
sir, I remember during the IPO days, you used to talk about this company, you will be there forever, and very listen such kind of statements coming from the initial promoters. And so, what is the next 3 year vision or 5 year vision? I mean, where do you see our company reaching? Maybe not in terms of either numbers or in terms of overall basis. What is the vision? Where do you see like the company reaching in next 3 years?
Sir, it's too early. I can't talk about the next 3 years, but definitely, what is the roadmap of the company? What design with the start? What was our objective and what was our thought to start this company? Was to build a quality and healthy product to our consumers. By 2030, we will be the best company in India. We are giving the healthy product out of all the other with quality check, as well as you can check the lab reports as of now today also. You can, if you in the all the parameters, if you check, we are the best in the industry throughout the India. If you compare with all the national brands, we are above the all the national brands of Tata or Ashirwad and other MDH. We are maintaining the high quality and high percentage of the. We are focused on to the healthy product and as well as quality product. So this is our objective to make it by 2030 that the brand
Understood.
will be there
Sir,
in, yeah.
sorry, go ahead, sir. Go ahead, sir.
Yeah. So by 2000, see, it's too early about the first next 2 years, 3 years. We are coming out with a lot of products in the pipeline. We have planned almost 300 products to launch into the overall into the next till 2030.
How many
So
products, sir?
it's
What you said? How many products?
more than 300 products.
More than 3 by 2030. Okay.
30.
Okay. So
This
what
is
is
our
the
objective.
big?
This is our
Okay.
objective. We will try to meet this to match our statement also.
Okay. So in that sense, sir, on an average, we'll have to launch at least 50, 30, 40 products every year going forward. It may be an SKUs which you're talking about, right?
Yeah, yeah, yeah. So
Okay.
each and every market, see, basically as of now, now today, if I talk about the chili product, we are having the 5 rupees SKU also, 10 rupees, 50 gram, 100 gram, 200 gram, as well as half kg. So every market we are penetrating as covering. So we are not focused on the single market. We need to focus on the modern trade or only wholesalers or retailers. In the C class market also we are focusing. So we are planning with all the SKUs to cover all the markets.
Understood. So what is the biggest challenge as of now which you think the company has in terms of, I understand, that you are start running a small company
The
in the initial
only
phase, the
one
growth
challenge
is
we have,
difficult.
yeah, then only one challenge we have, the quality manpower. We are struggling. We are struggling with that, but we are trying to come out with that, and we have multiple agencies we are working for that. But as of now, we are facing only one challenge, that was manpower, quality manpower, a skilled manpower for our sales team and groups, all these things. Otherwise, we don't have any other challenges.
Understood, understood. Sir, when you were planning to enter into oil industry, oil sector, it is very, I mean, a lot commodity heavy industry in terms of how and by when you plan to launch this product and how will you manage the risk of commodity here? Because the base being the commodity will have a high risk in terms of dependent on the market prices going up and down, right?
So I'll explain that about this is the thought of every investor as well as every this whoever research on the food products. I'll first clarify you what kind of oil we are coming out. We are not coming out with the commercial oils as well as refined oil. Refined oil is a highly fluctuated product as well as with the least margin, high turnover. So we are not focusing in that kind of business, which is a highly this fluctuating market as well as we can say unhealthy product. So we are coming to, as I said, we are coming out with the groundnut oil, which is having very low fluctuation throughout the year. Hardly you will find the 4 to 5% of the fluctuation, and margins also in very good maintained in the this segment. What we are targeting, we are targeting with the quality product as well as good margin product. And in the future also we will maintain, we'll come out with the product which are high margin and low fluctuation, and which is where is the gap of the market. Wherever is the gap of the quality, definitely we will target that market.
Understood, sir. And by when, sir, you plan to come up with this product oil?
June 2025.
25 or 24?
Sorry, 24, June 24.
24. Understood, sir. Understood. And as you said, sir, we and sir, is it possible when you share the half yearly results to maybe share a presentation along with that, which gives a good insight to investors also with regards to what all company is doing and what type of product and margins and all the key KPIs getting covered in that presentation?
Okay, I'll share you the presentation definitely, and this after that this
Yeah,
after the meeting
because sir,
definitely.
sure, sure. And I mean, you will put it on the exchanges or how it will?
Yeah, exchanges. I'll put it directly in the exchanges. No issues in this.
Yeah. So because that gives a good insight, sir, and really, pleasure talking to you, sir. Looking forward to a long-term relationship and in these interactions on after every result, sir.
Okay, thank you very much.
Thank you, sir. Thank you.
Thank you. Next question from Nitin James. What would be the capex requirements management is forecast for FY25?
Ignore करो, बोलना ही कर सकता हूँ.
Any guidance for revenue in FY25, either in terms of an absolute number or in terms of percentage growth over the next couple of years? We'll take the next audio question from the line of Vikas Joseph, individual investor. Please go ahead.
Hello, sir. I just wanted to ask you about the oil segment that you're getting in. Is there any indicative range on the per kg or per liter rate for the oils that you will be introducing? Just want to compare it with the commoditized products.
Yes, sir. So basically, our product is a kind entirely different product from in all the parameters. We are maintaining. First of all, we are coming out the unit, which is export oriented unit, and definitely we are trying to get the USFDA certification also. We are into the process with the consultant to get that. For that, we are maintaining. We have to go for the one microbiological lab. We are setting up with that. As well, we are maintaining the high quality product which is not available in the industry as of now. So price will be slightly high than the other available products, but not with the cold press oil. We will be the accessible with the all the to target all the consumer. So that price point will be around 190 to 200 in between per kg oil. And if you see the other products, the cold press they are selling the double filter oil, and this they all are around, they are placing in 300 400. There is no fixed price for this actually. So but we are focusing on the maintaining the price point to target and all the consumers.
Okay, and with regards to you are introducing a lot of differentiated products. Have you got any plans on marketing the products? And is there a marketing budget you have assigned for next year? Because when you are selling the oil for a higher price or atta for a higher price, you need to obviously spend a lot of money on marketing it as well, right?
Basically, we are focusing on the in-store branding mostly and store boards. We are focused on to the, because our target customer who is visiting to the store is more focused on to the advertisement kind of thing. If you go for the advertisement, the TV or and I don't think so these days ad running on the TV is visibility. We'll get the visibility of the consumers. Most of the people are shifted to the OTT platforms first of all. So still we are focusing on to the branding, in-store branding as well as boards. We are definitely, we in the next financial year to get into the on board. We are trying to we will be go for the, we will put a budget for this in the PVR inox to target the premium consumer. For that will be slides will be our ads will be given into the theaters, which are
Okay.
our focus customer for the to get that segment.
And as far as what you're telling me, sir, in the Atta segment itself, your market is pretty huge. Currently, you are only on a run rate of around 60, 65 crores per year. In the Atta segment itself, you can reach, 300 crores per year. So why are we going into all these unrelated diversification is my question.
Yeah, it's actually a very good question. So the problem is that the industry, how the consumer mindset and industry mindset. If you go for the for example, I'm giving some examples for that. What is the Maggie actually? Nestle is what is the company Nestle makes? It's about only Maggie. You won't get the second product mind in your mind. Ashirwad you'll get in mind Atta. So the every company we have designed our company as a multiple. No, it should not be stick to the one product. We doesn't need the atta actually. We launched the atta. We can run our company with the only spices also. But once it is 3 to 4 days, the people will the consumer is habituated to get only the mirchi, so it will become only chili company. So other product definitely it will fail. It is our observation as well as we have research and all in all these parameters to get the product in a every 1 or 1.5 year gap where we'll introduce a new product. We will definitely we are not putting much efforts, much expenditure, or we are not hiring to the in the or we are not going for the rentals as well as the third party manufacturing to maintain the quality. We are going with in-house manufacturing. We have enough space to build all the this plants. Only capex will be required only for the machinery point of view. But once it is we have introduced the multiple products, we'll get all the range will be movement. In any company, you can't find the second product is a successful product. Every company is having only one hero product. You can check the case study with all the companies. So to should not stick to the consumer's mind. It is only a mirchi company, is only an atta company, and is a masala company, or it is. And for example, ITC has failed into the masala segment because of
Mhm.
this. The people know ITC only with the Ashirwad Atta. They are failed to the into the masala and this chili segment. So to come out with this kind of a psychological effect, this is a psychological actually for the consumers. So we don't
What
want to stick to the company as a one product company.
what will be the capex requirement for this oil segment? So you told only machinery is required, and what will be the margins of it? Will it be much higher than your current margins?
No, no. Margin will be slightly lesser than this, but potential and movement will be the fast in this segment, actually, oil segment. Still, in the what we are targeting is around 15 to 18% margin into the this segment also in the oil segment. Capex definitely required, but it's I'll definitely update into the this details all the.
Okay, okay, sure. Okay, sir. Thanks a lot for answering my questions. Thank you.
Thank you. Next follow-up question is from the line of Vipul Lamba from EVK Financials. Please go ahead.
So, sir, one more question, sir. When you said about this 8 crore run rate per month, is it possible to give a breakup of revenue, atta and spices in this?
नहीं, 55 to 60%.
40% is we are running with the 40% in the atta and 60% is this CTC our this masalas and spices.
Okay. And with this run rate, sir, we'll be easily be able to hit a revenue run rate of more than 100 crores, right?
Yes,
Or approximately 100 crores
yes,
for next year.
Yeah.
yes,
And that will be good increase of at least doubling the revenue, right?
yes, definitely.
Definitely, the scope is good.
More than doubling. It's like 3x the revenue which we have right now in the last year, correct?
Yes.
Interesting, sir. Thank you, sir. And sorry, one in this, sir. spices and atta, what is the margin difference?
So margin difference is not much gap actually in this both the segments. Both are having the
So
same
similar
margin.
to that.
Yeah, yeah, yes. There is no margin
Okay.
problem in this. But operational cost is more in the ATA due to the logistic issues. We have more logistic cost in the ATA segment actually.
Okay. 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 Okay, sir. Thank you. Thank you.
Thank you. Reminder to all the participants, anyone who wishes to ask a question may click on the raise hand icon tab available on your toolbar, or you may also post your text questions on ask a question tab available on your screen. We don't have any further questions. I'll now hand the conference to the management for closing comments. Naran sir, would you like to give any closing comments?
Yeah,
I,
thank you everyone. This is Srikanth, General Manager. So I would like to, make a closure of the session by saying that, thanks for investing in us and keeps invested. And all I would like to say is we are definitely looking for great opportunities in building up this brand and both in terms of revenue as well as the profitabilities. And we are also coming up with multiple, the product portfolios and the diversifications into the categories. I'm talking about the other multiple trades the general trade and modern trade and of course the D2C parts of it. So these are the areas we are definitely looking at as an opportunity, and the potential that we carry for these two states are definitely so high that we definitely have all the opportunity in terms of growing this organization. Thank you very much. Close.
Thank you very much. On behalf of Srivari Spices and Foods Limited, that concludes this conference. Thank you for joining us. You may now disconnect.